Okay, welcome back, guys, to the third video in the Holy Grail trading concept series, which is a 5-video series. And in this video, we are going to cover the Enigma trading concept, which is a entry technique that you can use to complement your understanding of the market direction when you combine with other logic such as supply and demand, support and resistance, time and price. Okay, so what is this? Basically, you want to identify a candle body that closes below its own 50%, right? So that means every candle is 100%, right? Every candle is 100%. So for example, let's say I'm taking this candle right here, right? This green candle. So the color of the candle doesn't matter. That's the high of this candle, and then that's the low of this candle. Okay, so right here, that's the low, and then that's the high of the candle. Now, what you want to see is that the high of this candle is at least higher than the previous candle high. So like I said, when you're looking for a sell trade, the high of the candle has to be higher than the previous candle high. That's step number one. Two, you want to see the candle body closes below its own 50%, its own midpoint, right? Why? Because that's going to confirm that we have a probability, not a guarantee, a probability of a bearish intention in the future. That means now all you gotta do is wait for the next few candles to open and retest at least the 50% so that you can open your sell trade. And then once they retest the 50% here, you can open your sell trade and then place your stop loss above. Sometimes the market goes deeper and retests the 50% of the 50%. So you can use the GAN, because remember, time is fractal, right? The 50% is going to be a key level. Sometimes they retest the 50% of the 50%. Sometimes they retest the 50% of the 50% of the 50%, right? So all these are very strong key levels, and I'm going to try to show you a few examples once I identify a candle here that is probably retesting. Okay, here is another example right here. Okay, so observe this. If I take this candle body right here, it's a bullish setup. Look, the low is lower than the previous candle low. The body of this bullish candle closes above its own 50%, above its own midpoint, right? So that means the logic here is very simple. There is a probability that it's going to contribute. This understanding is going to contribute for the market to go higher. But then also look left. Left, we can see that this is making a higher low. The market is in a bullish tendency, right? We are making higher lows. So you are combining also this logic. You are combining time. What time is it? We are in London session. Okay, now the next candle come and you see it hits the 50%. But not only the 50%, it hits the 50% of the 50%. So now you can get ultra precision when you come here. For maybe here you enter 0.50%. Here you enter another 0.50%. Your risk is 1% now. The market close higher, you're already in profit, and then after boom, the market explodes to the upside and you have precise entry. Your stop loss can be here. Note that sometimes the market do reverse 100%, a little bit more sometimes before they actually go. It happens, guys. It happens. And then for example here, look, this is an example right here in the middle of a trend right here. Notice how they came exactly to the 50 once, right? The 50 of the 50, right? Let me put the 50 of the 50 right here, right? Right here. They went up. They provided an opportunity to go up. And then they decided, no, we want to go down. They changed the trend. You understand? Now, notice this high of this candle. You see how it's higher, right, than the previous candle high? So it's the same apply. You take this GAN, you place it at the top. You're looking for bearish trade right now. Why? Because the candle body, right? The candle body closes below its own 50%. The candle body closes below its own 50%. The candle body closes below its own 50%. The high is higher than the previous candle high. So we're looking for sell trades. The discount is from the 50%. Look at what happened. The market hit the 50% and then goes down. The next candle, instantly, as soon as this candle closed, the market comes, hit the 50% and drops a few pips, right? Well, it's on GBP JPY, so that could be at least 60 pips or more, right? And then here, as you can see, they come and respect the 50% of the 50% of the 50%, right? That's the second 50%, right? So now we can adjust this again. You see, like I said, the 50% of the 50% of the 50% on the London session high on that same day, and then they rejected, and now they respected this demand level and this fractal resistance that became support, and then the market went up with the opposite signal. So this is the third video. That's the end of it. Thanks for watching, and then stay focused for the next video, which is basically time and price.